back again. So I had to drop a little video on the Powell thing. So we're gonna go. Really unfortunate, man. Ahead of the Powell, ahead of the Powell basis points that I expected to get me a pretty good drop to get out of that short. I got bought in. I hit expiry again. And I know I talked before about, if I hit it again, probably something wrong with me. Yeah, probably something wrong with me at that point. But I held it on for so long because I knew the expiry was coming, and that was exactly 10 days for me. And I was supposed to have 240 hours. I should have had until 4 something today. And I guess because UTC is different than my time or whatever, like it hit expiry, or maybe it's about 240. That was really painful. And like I said, I always show it. Like that sucked. It was only 0.17. It cost me a lot of gains. Took me down from my goal of just about to crest over to zero point 0.1 from the 0.097 that I had. I'm so disappointed with that. I had managed the shit out of that trade. I feel like I feel like I did it pretty well. It was unfortunate I lost a lot of time, and I could have made that money up so long ago. But I had a reason for it, and I really thought I didn't think it was going to hang up that long. 20's been pretty rejecty, everything over 20. So when we got to like 21, I was like, you'll probably fade off. I expected a day or two, and I like I talked about, I was okay with paying 2.2. So 1.7 is better than I thought I was going to pay, but I really feel like if Powell speaks, he might tank it a G, and I'm like, man, that if he tanks it a G, like we could have got out of break even. Oh, it's so disappointing. But if I really believe that, I do have the ability to short right now. I dropped an idea where I feel like Powell's probably going to tank it, and then they're going to buy it up and trap shorts in. I have lots of time on this long. I may end up in the same situation where, excuse me, that this goes, way down and then starts to kick into the 19 level. Maybe I hit a reverse expiry on this one. Even if I did, man, like that just takes me back down to like where I started with what I sent in. That would really suck to lose all that gains. But for Trade Journal, seeing where it goes, like what's going on, no big deal. I mean, this isn't like we sent over life savings or anything. This really was a test to see, like can day traders make money, and what's the most optimal way for me to do so. I'm not a financial advisor. I'm not classically trained in trading. I'm a guy that read a bunch of stuff on the internet and other people's advice and books and took it to heart, and I've found some decent, I can't complain. I found some decent edge for myself overall. And when I don't make stupid mistakes like seeing it go from, a 19,233, short, and then getting caught in some news that ramps me up 1,000 and not just taking it off, I usually do pretty good. However, since this is, one of those testy journaling accounts, I have a different idea. I trade this a little bit different than I trade like my cold storage account at 1x. So I'm probably not as safe as I should be on this, because again, like it's such a small amount, and I just kind of want to see where it can go, and that's such a bad way to trade. It's like, let's see where it goes, versus aggressively being like, this is our goal, so we're gonna take it. The goal shouldn't be see where it goes. Just be like, always take good trades and be about it. So I haven't been about it on a couple trades, and obviously it shows in the track record. But if we go look at the closed positions again, I mean, I have 3 losses in all this time, and unfortunately those couple were substantial, but each one was the expiration. And I had said, if I get caught in those, like I'm an idiot. And I just got caught in the worst one of all. I mean, I really tried to manage it out, and I'd calculated out the hours. I really thought I was going to get through Powell's speech today. I'm really upset. Like, that's super embarrassing. So anyway, but everything else is like really good. The expiration, all the rest are wins. Now the first one that might actually be a loss is this hedge I took, and I was shooting a video at the time, making some content. When I went out to edit, I missed the exit, and that's on me. I should have just took it off, but I let it grind around and screw around, and then another time I was asleep, it didn't get high enough to get taken off into gains. I could have broke even. That's just kind of some of the hazards. Like I can't watch this stuff 24/7, and that's another reason why I don't take trades that are gonna, go past the time that I'm going to be able to stay up and watch them, or if I've got stuff to do. I don't like to be in trades that are high leverage where I got to go, pick the kids up from school or something stupid. Like, then you come back and you're like, oh man, like that LTC move today. Ooh, that was crucial. I sold a bunch of, I saw a bunch of, like selling going on at like 55.50, and I'm like, that's the spot, so I sold my little bit LTC because there was a bunch going off there, And within like 10 minutes, it had ramped like $66. That was a crazy breakout. That could have been to the downside or the upside, given Powell's speaking. It's pretty odd it went to the upside, but I'm super glad I wasn't short right then because I have no idea what made the move. You know, it wasn't like it was something you could look at the chart and kind of decide as obviously something surprising because only that moved, you know. So it was not even like sector news, it was coin news. I don't even know what it was. I'll go try to find it later, but I looked and I couldn't find anything what caused that spike. So right now we're kind of looking to see. Let's make sure we cancel the trades. We got our sell and our protection in. So we got protection at 20,180. So if it comes down there, probably will, and Powell speaks, it'll probably ramp us back up. That makes the position a lot bigger than I want. That puts us in the position to lose another 0.3. That would be unacceptable. So given that it's kind of ramping a little bit, let's see if I can get a little bit closer before 230. And I've also got the idea that they're going to start to counter run and bury shorts. And like I said, I could have got out right there. I was asleep. Up in here, I was close, wasn't enough. I let it go. And then it just, you know, kind of faded off and meandered. So we'll see. All right, so over here on Fucko BitGet, though, where I've been streaming and talking about, I converted the LTC. Let's see if I can just go through this. So here's some of the order details. Like I said, I'll do this. So today, see, looks like I opened a short. Looks like that was the close of that one. Yes. So I made a little bit of money on that one. That's just pretty much, you know, all that's been going on. And this was after I switched back money to USDT. So when I first started, I don't know if it'll show it. Let me see. All right, so I'm going to start off like this. So this is what we did. So we sent over these 2.84 LTC. And I'm not going to keep trying to track that of like, I don't want to trade just LTC. So whatever that was, maybe it was like $155 at the time, whatever, you know, if you LTC, whatever. But I want to convert it to dollars so we can kind of track this trade journal. This is like a side trade journal. Like I'm checking out the new exchange from RJX after getting off their scumminess. However, like I said, I've already found some scumminess here. So, you know, not the most fantastic. So then I popped over, made a few trades. We did a little bit of stuff. I made a mistake on a little bit of the LTC, and I decided definitely I don't like trying to figure out my gains off percentages of LTC. I want to see dollars. This is what my brain can comprehend very quickly. I don't quite know what the fees work out to here. So then I popped over to spot. I got 0 spot fees right now. It's really cool. So in the LTC here, I don't know if it'll show it. Maybe it will, order details. We went ahead and sold 55.50. We sold our little, you know, 3.3 LTC. So apparently when I was trading over there from the 2.84 that I sent in, even though I had a loss, I made a little bit of money on the futures, and I brought it up to 3.03. Nothing spectacular, but within a few trades, you know, we had a little bit more. We sold that at 55.50, even though we could have got way more. Like, look at that. Oh, we sold like right there. I was so happy too. I saw that dip and I'm like, maybe I should just sell it. It's like, you know, it's 3 LTC. What's 50 more cents? And then damn. It isn't like I would have took that right. You know, I took it off into the strength, but that was pretty crazy. So I'm surprised Powell's going to speak today, and then it went up to, you know, $62 here from 54 and 66 on some places. It's pretty wild. So an extra $30 we could have had, but whatever. It's not like detrimental. So the start account here is 168.50 and a ninth of a penny. So let's call it 168. Popping back over, that's all USDT now. We converted out. You've seen the move in, the move out, the trades that were made the other day. And then now we are over on USDTM futures. And looks like we probably just go straight to LT, or what are we trading? BTC. All right, so over here on that. Hello. Load me up, daddy. So right now our account equity is 177, so we're up a little bit, unless we lose that one. We're up a little bit on this one, but I don't think we can break fees just yet. So overall, like, we're doing okay. Powell speaks, he might tank this, but we've almost hit our sell. I was out shooting some videos and things, and I just was a little bit too aggressive on that, because again, I don't quite know fees. I think I tried to take like 20%, and I figured 15 goes to the exchange and 5 goes to me. All I care about is that number. You know, number go up, buddy. Number go up. Number goes up. I'm not going to worry about what they get paid. Just number go up. You know, make daddy happy. We're good. So we're cruising at a 7.7. We're like 13 earlier because I had an alternate trade in on the short for that APT trade. So I started getting buried. I got scared. So I threw this one in at like half the cost. So I had I don't know, double the other trade. So this trade says it has $442 in it because of leverage. The other one was like 800 something, and I had a short. And it was going against me. I was like, holy shit, I'm about to be sorry here in a minute. And then while I was out doing whatever, this is what happened. It closed me out, and then now it's back up. So we're looking good. Or sorry, that's BTC. But APT looks almost exactly the same. You know, they're all fractals. So it started going up in here, and I was like, oh shit. I'm like, that's not good, dude. Like I better I better hedge this off. So I took a long. I just set it up there because I'm like, who knows where it goes. And then I came back down here, closed my short. I'd actually had a 716. I actually went to 710. Like that's cool. It made a new low, but again, I don't like to trade into like wicks. I like to trade into strength. That was where I figured it was about right. It was off on the lower edge of those wicks in case it got down there to test and a little short. I thought, you know, good deal. So that'll say 716.7 is what we did. And, you know, we made a whopping $8.42. But again, on $168 account, I mean, that's pretty good. Like, what is that a percentage of, like, I don't know, a few percent? What do we make? How decent is that? We'll say we made $8 divided by $168. We made a whopping 4.7. So 4%. We made 4%, right? We're going to round off numbers here. We're not going to dick around with percentages and cents. That's not bad, you know, 4% return, like a little bit of something going on. You know, they got paid some fees. They're happy. I'm happy. It's cool. As the account grows, if I can keep doing 4% in trades, I'm pretty happy with that. You know, 4% account growth, like, wow. Not bad. But we see with Margex that if you start, you know, risking too big in, even if you're running cross, like that's your whole account. Like, so you have to be careful. You can't just always bet the entire account and putting down 50%. When it's low like this, I don't mind doing that because a few really good wins, like when you're in the right zone and in the right direction, if you know, are betting 100x, you know, leverage and most of the account, well, you take $20 and go to 40, 60, 80, and then you get up to like 1,000. You can pull back and start to cruise because then when you make a trade, you make $100, you know, on a 10%, a 10% bet that moves, you know, 100%. Like, it's pretty good. Why not? That's cool. Or you can make a $200 bet, you know, 20% of the account. You can move 50%, you get $100 back. I mean, you're starting to make it kind of worth your time, right? As long as you're doing good works. The really troubling thing is to get a really small account up where most people, you know, they have limited paychecks to work with. And if you're trying to make money, you know, and make the most of your time, it sucks because you got to take a long time and trade these $1 trades and start to learn how the charts work and how the tools work. I'm trading a long time, and I don't know how some of these tools worked on this exchange. This shit was different for me. So I feel really sorry for someone else who's totally brand new and trying to like figure the market out and figure out how to make money, you know, and how to make good trades, how to control themselves. Like, man, that's a master's degree in psychology and marketing all rolled into one. Plus, you know, using flight controls and settings and shit and like where the traps are. Like, if you look at the screen, like what happened today with LTC or like this, man, somebody knew they got wrecked. They were like, look at this. This is the bottom, bro. And then they got long and they got wrecked. They got wrecked again. I mean, where's the bottom when you start seeing things like that? Where's the bottom? The bottom is wherever the bottom is, dude. Like, there's no predicting the bottom. There's just more and less leverage. And like, that could have been a good spot to go long. And that could have been a good spot. And that could have been a good spot. And this could be a good spot too. And maybe it goes to $5 today. You know, Powell speaks and it just, you know, shits all over the market. And a brand new guy, man, they ain't got a chance, dude. they're paying for lessons, so you can't afford to be like, I have $1,000 I saved up, you know, after I paid all my bills and did what I had to do. Like I skipped entertainment, I did all this stuff, and now this is my entertainment money. Is how I'm gonna view it. And then you go make $1,000 trade because you're like, I'm gonna make money, and you lose all your money in trade one. That's cold-blooded. But if you start trading $1 at a time, so you can learn the game, like you get roped into learning this stuff forever. Like, you're so buried. You're buried for years. I saw a really good post the other day on Twitter. It made me laugh so hard. Like, it's so enjoyable because it's so relatable and true. The post said 2017 In 2017, I was a software developer making 120K a year. and last, and then I quit to become a day trader. The last month in October, I made $27. That's fucking true, man. You can get wrecked, and they've been trading for years. So, I pity anyone that gets into this game and wants to get into it. That's why I say, like, I'm not a financial advisor. There's nothing I can teach you. You can look at some of what I'm doing in my trade journal and be like, whoa, I never knew that could happen. Like, wow, I'll try to skip that pitfall. Like, now I've kind of seen it once. That's the best you can do. Nobody can write a book for you and you can read it and be like, I have a PhD in trading. I'm gonna make all this money. Like, nope, ain't how it works, man. But learning a new exchange. Personally, I'm not a financial advisor, but I would never send over a lot of money off the jump. One, the exchange could be shady. Two, you could send it to the wrong spot, especially in crypto. You send the wrong wallet, all your money's gone. There's a lot of things you got to learn about your wallet and the accounts and risk management. And one of those is sending over just a little bit amount. Now, I was going to send over a lot more because they were doing a bonus. I'm like, you got me. You got my greed. You have me enticed. Ooh, I want to send 5,000 a 1,000 bonus. Like, no big deal. And I traded that little bit of LTC on coin futures. And if you watch my last upstream, you can see that they were skip and filling me. It's pretty shady. So unless you can really get taken off into strength, which is why I said I decided that, these wicks down here, they have a problem with revisiting things. So I wanted to take off into strength, even though I did this. That's probably super logical. I don't care, man. Like, after I saw what I saw with their fills, ooh, you have to have a lot of experience and skill to get around that. And that means you have to take less gains to not get screwed out of your entire account. Like, it's pretty shady. But if you want to be on these, crazy exchanges with 100x leverage and, all these places, that's just that's the nature of the beast. That's what you have to do. You're just going to have to take the punishment. And, excuse me, the more time you've traded, the more you know shit like that. And the more you watch other people trade, the more you run across something that happened to them that doesn't have to happen to you. Or at least if you start to see it happen, you're like, holy shit, this is not good. Let me get the fuck out of this. That's why I watch other people trade too. Like, I'm probably a better trader than most of those guys as well, but that just really resetting headlines. But like, fuck you. But they're in other areas, and I want to watch them because they're good traders. And sometimes, something happens to them. I'm like, ooh, oh, lesson learned. Better happen to you than me, pal. So it's worth a like and a subscribe. Just to cut down on that kind of fuckery. So if you like, subscribe. Nothing, like I said, nothing exciting happening. You're not going to come here and be like, oh man, I'm watching like $1 million trader. Like, nah, it's a couple $100. The other one's, up to about 2,000 now. That's not true because I got clipped today for 0.17 plus fees. So I got clipped for 9, I might clip for 9. So yeah, this one probably cost me. But overall, I've shown some fantastic trading overall. It's just those 3 expiries, all for 3 really good reasons. However, my reasons weren't good enough. The market told me, go fuck yourself. We don't care about your fucking reasons. Like, we're gonna clip you ahead of pal talking too, buddy boy. Like, get wrecked. That's the markets for you, man. Fuck you, get wrecked type of thing. All right, so we are actually in a bad position right now. If pal's about to speak, and we're long APT and we're long BTC, and if he's gonna be not kind to the markets, probably behooves me, right, in my best interest, I don't care what anybody else does with their account, to de-risk. No matter what my other bigger idea is, that there might be a bear trap going on and they might counter run the shit out of it. That's hoping. That's not good trading. It's hopeful trading. What most likely happens, the thing that I generally need to go with, and that's the market tanks. So we're going to go ahead and probably try to get out of this one a little bit early if we can. Moving on. 20,477. How close is that running to max? It is. I mean, overall, look at that upper time frame chart, though. I don't want to get roped into this idea of how beautiful this chart is for, a bottom out and an expansion, because that's days and weeks. I'm in a, 8-hour funding clip every, 3 times a day. Like, I can't do that. But in general, this is a beautiful chart. Even if it comes back down to like 18, comes back down to these lows and sweeps 17. I mean, this could see 17 and then see 40. That's beautiful. That's a thing. But not on 1500X. So let's drop time frames. Where are we at? Where are we at on the 6 hour? On the 6 hour, and we got a bunch of shitty looking candles. What do we got here? We got Powell getting ready to speak, and we have this wedge. Look at this wedge. It's just wedge coming to a point. So it's either going to break up or down. Powell speaking is probably going to break it down, most likely, and then it breaks it up. So if we're like, oh, look how beautiful it looks from 17 to 24. Yeah, on the daily, that's a long time away. We're trading high leverage on this. We're trading this bar. So inside that 6 hours, a lot of shit can happen too. Let's look at the 1 hours. Ooh, in the 1 hours, it's starting to ramp a little bit. Look at that, showing a little bit of strength. In that wedge, it's breaking to the upside. So we might get out from our little trade over there at 5 whatever. But Powell, let's see, 11, 12, 1, 2. Fuck, he speaks in like 30 minutes. Ooh, we better get out of this trade. All right, so we're gonna get out of this trade because Powell's a date. Oh, look at that volume shoved into that candle. Oh, we're getting the fuck out of this trade right fucking now. Get the fuck out of here. Where are the walls at? Yeah, there's not good walls below either, but there's nothing above. They're definitely enticing you to like hang on to the trade. This one we're not going to get out of. We're going to take the extra entry because I don't think he can tank it through. I still have time on this trade. We don't on the 30th, so I have more time. And I am willing to go ahead and risk the 0.3. It would be very painful and it would really fucking suck, but I'm okay with it. Are we still in gains? Oh, 3%. I don't think we cover fees with that, but I don't think we can afford to wait. Speaking ahead of Powell, we can't wait. So we're going to go ahead and flash close that out. Loss or not, doesn't matter. All right. Okay. And let's see. Books were at 450, 449. What did we actually get on a fill? So we did lose a little bit of money there. We got a 245 fill. Okay, so that was pretty crisp actually. And oh, look at that. We got ahead of it just right there. It's starting to show some signs of, go fuck yourself type things. What did that get down to? A low of 433. We got out at what, 45? Yeah. Oh, 450. Oh. Actually, we got a little better than I thought. Okay. Well, that's not terrible. They didn't do me too dirty that time. However, we did give up some gains there. I mean, it is what it is. But for the D-risk, talking, ahead of Powell and being open to join either side, it's worth it. It's worth a few bucks. This, I think we're probably fucked. So in that case, what would I probably want to do here? Well, I would be interested in opening a short, but it's so beat down that it's already down 12%, man. Like, I would be interested in opening one just below that long, but I guess I'd have to wait on that, right? I need to chill out. What's the daily low? 7 what's the 24 hour? 710 to 830. I mean, getting in a short here, this close to the bottom, just because we think Powell's speaking after it's so beat down, I think that's too much risk. It's already beat way down. Getting caught at a 722 short that ends up finding a re-rally to like even 750 or 8, like that's detrimental. So it's not good enough to even de-risk and hedge yet. I'd rather lose the $5-10 that's in this than find out I'm going to hedge and lose, a way shit ton more. So we're going to sit back and just wait for a little bit. I'm going to be right back and get a drink. All right. So far, so good. Yeah, we could have got a much increased exit on that short we had. That's unfortunate. They didn't buy me in too bad. It's 433, I think, was the buy-in. Let's see, 433. Yeah, I mean it's probably gonna crest under 20. That's unfortunate. Oh well. Either way, it's out of our hands. No worries anymore. And either way, like it wasn't that bad of a loss. Like who knows? Not too bad. Yeah, right there. Already right back to exactly what we were bought in at anyway. So I don't know. It's 2, let's see, 11, 12, 1, 2. So yeah, their meeting started, and I guess he speaks at 2:30, somewhere in there. And they talk about the last half of the meeting. So anywhere along here. That's an interesting snapback. I was considering taking a short. I don't know if I really want to open a short on this right now. It's I don't know. It seems trickery, man. I'm just really not sure. I think the news is just too slippery on this. God, I'd hate to take a short and find out they're going to counter run it, and I'd be really mentally beat on that. I don't know. I suppose we take a small one in anticipation of there being bad news. I mean, I don't know. I suppose that's what we do, right? Let's take a partial. Let's take a partial on a short. So I'm gonna take a short here, right? I guess we could let it pump up a little more. If it's gonna pump up, but the meeting's starting. What are they at? What's the best here? 454, 420, 428. Yeah, let's let this candle form and pump up a little bit. It does look pumpy, doesn't it? I guess there's no reason to jump in too early. It just other than I know the meeting's starting up. Well, I wonder if that's broadcast anywhere. Really nice to get that live news stream. Boy. It doesn't look fantastic, does it? That's interesting. It's like it doesn't want to break down, and somebody is buying. It's just, there we go. There it is. Powell must have been speaking. All right. Damn. I guess we should have took it. Oh well. Just wasn't good enough on that candle formation for me. I couldn't. Yeah, there we go. The other way. No, thank you. Way too fast. I don't even know if I could have caught that. Not worth it. Yeah, that's why we're sitting. Would have been nice, but it is definitely. I mean, that's a lot of wide range body candle right there. What do we got on this? That's 232 to 521 inside of like 30 seconds. Like, it's too hard to clip. You go and even hit market exit, and like the fuckery on that, like you could actually short up here, and it could be down here when you hit close, and it might close you above it. I can't risk that. Not worth it. So we're gonna kick it and watch. What we could do is we could take a smaller trade. Oh, there we go. What happened here? Oh, yeah, instantly we're in gains in this trade, and that's why we didn't take that 720, right? Now, is it smart to wait for the 756? Probably not. I mean, I think we probably just grab gains at 24% right here, 29%, 31%. Let's go ahead and get ready to flash close this. 32, 31, 29, 23. Okay, so we probably maybe should have closed that. Like, that's, it's a pretty big snapback from 30 to, 11. What are we at? 74s. I mean, you might get it. I don't know. The fuckery going on right now is strong. It is very strong. The fuckery is too much. All right, we're up 24%, 25, 26. Our job is to pad the wallet, right? We're here trying to get to the $1,000 mark. So let's flash close that. Okay, we don't care. So the little bit we lost on BTC or whatever, we're back to the 178. We're flat on all trades. Good enough. We're set to go ahead and start back over and grind the wallet. I think we said it was a 165 total from spot. And there it is. This is up a bit, man. That's cool. We might have actually got the actual exit we were after, but I really can't risk it on that. It's too low. I just have to build the wallet up. I have to take good trades. 25% with stuff going on like that. When I just saw it, go from 30 back to, Well, yeah, see. Oh man, this is that's they tricked them. They're about to smoke these bears. Ooh, that's dirty. I'm almost glad they bought me in at 433 now. Like it might tank from here, but that is a serious rejection. I don't like it. Could we get our close? What is our close set to? 945. What do we got going on with these two candles? 724. Ouch. We're close. $200 off. We'll let this bounce around. Yeah, I'm glad I didn't take the short. That's why I said, like, maybe. I just can't take it into that. So 2 o'clock, the meeting started in 3 minutes. That's what happened. You know, you probably got people just whacked. Let's go look on BitMEX. Anybody get whacked? Yeah, look at that. Look at that. They molested people to... Look at that candle. Molested to both sides. He just... Yeah, they're about it. So that 23K idea is in play. Like, it's intact. We're probably going up. Unless the points come out really bad here in a little bit. I mean, I suppose it's possible, but so far, so good. What kind of fill did we get? Let's go see. We got about a 30 fill. Oh, actually, we got a 736 fill. Okay. So we got a 2450 on the BTC. We lost a little bit of money there because the fees were 0093. We only made 22. And so it was 93 cents. We made 20. So we lost about $1. And then over here, we got a 3.6 fill, and we're at 3.7. I mean, we did okay. That's not bad. Might see way more, but we can get back in. So we're flat. Flat over here, ready to do some more trading. Maybe we're going to get off APT in general. Maybe we're just going to go to... That's down. Yeah, it's down 10%. I don't like it. It is down the most out of everyone. I mean, it's probably got the most room to run. Whoa, what is up 71%? Mask. Wow, what is going on there? You got like football at 0. You've got Jasmine at like 0.4 and 1 at 1%, and Luna Classic at 68 and Stargate -2. That's like the average, and then all of a sudden Mask is 71%. What the fuck is going on over here? Like there is nothing else in that zone. Like not even Doja's in that zone. That everything else is 2 to 3%. With the outside being, people's 23. Whatever, that's some weird ass. Fuck that place. Some bullshit. If you have kids watching, definitely, I run off at the mouth sometimes. Probably best to not have, you probably put your headset on. LTC held up at 60. That's cool. Yeah, nothing else is up like that. So let's take a look at Mask. I don't know a lot about Mask. I have to go look at them too. What do we got going on here? So people, I don't like people, but we'll look at people anyway. Right? Why not? We could look at, that's a terrible chart. Pass. Already on crazy pullback. Don't need that shit and get caught in some weird snapback. Move is already done. Mask. What's going on here? Ouch. Look at that. Still up 70% after all that. Good Lord. As high as 413. Ooh, that is ugly. What is going on? Is that really up? It is up 70% still. Damn. That's wild. Wow, the low was 232. I got to bring... Oh, that's why. I was thinking that was session break for the 24-hour. Wow, that's... I wonder what's going on in Mask. Ooh, I almost want to trade that. This is the kind of trade you take that blows your account out or totally makes it. It's like a 50-50 flip. Like, that's in no kind of a good spot. Let's pass. Oh, as much as I'd love to try, I don't know this chart, so I can't. I don't know enough fundamentally about it to be like, this is the right trade. Nope. Oh, God, I got to go deal with... 723 on BTC. So what's going to happen over here? Oh, we're going to win. Yeah, so that close on that long was perfect. I really thought I was going to get out with Powell speaking. And then I posted up a little something on there that said I think they might be trying to run bears. And I'm glad they bought me in at 433 now. Fuck that. Fuck that noise. That's insane. All right, well, so we're not going to short over there either. I suppose we could throw a long on. I suppose it could be trapping here still, but I mean, is it worth finding out they're trapping? Negatory. Oh yeah, this This is not good. So given the BTC is running, is there something we could find? Okay, so it is kind of running APT, which we just were looking at. Yeah, we could have definitely got some more on that. We got 36s. I mean, it's not worth the risk though. Can I go back in on this? Not really. I don't think I can't find a good enough spot that's edged in my favor. I can't see. Is there anything else? LTC, I know. Well, it's just up from 60 to 60.38. It just went up 1.5%, as much as entirely BTC did. I mean, that's that's probably pretty cool. Good for them. Good for them, and I like LTC. Good people. Good coin. Link. Dot, I don't know good enough. Doge, that makes me so happy to see it down. Fuck Doge. Fuck Doge and fuck Doge some more. Matic, I'm a real big fan of. ICP, wow. I think we hold some of the family from like 150. That is harsh to see that down like that. That's painful. Damn. ICP had such potential. File too, dude, down from like $60 something to 5.3. This has been a really, really tough pullback this year after this halving. It's not been pretty, that's for sure. What else we got? Anything we can get in on? Mana, the downstroke. See, do we want to shorten BTCs going up like that? Possibly. I mean, everything might be topping up. Alice. Algo. Ooh, IOTA. GMT, I don't know them. Still. Ape. Run. Apes on here? Wow, what a waste. Mask. Yeah, Mask is pulling back. Oh well. Again, I can't risk it on that because it can re-ramp and rally. Get the next set of emotional buyers in there. No thanks. All right, so let's go manage this BTC trade because there's a possibility that's coming back. I mean, maybe we've been given a gift and we should bail on that. That's possible. Maybe it's just accept both losses and move on. Let everything reset. Take a day off. All right, so is this pullback like this that just re-rallies? Or is this the pullback that says, hey, we've had enough? Nothing in the chart gives me an indication that I can take an edge trade either direction. Potentially, again, like that's got the potential maybe to go down to like 476 pretty easy. I don't think I can risk it though. I can't risk. I'm trying to find some edge. Any minute though, edge could show up. Any minute I could get some direction and have a better chance, like a 60-40, 70-30 in my favor. Where okay. Doge, maybe. What's the high on Doge? 14.7 down to 13.5. It failed on the push. Yeah, we might be able to hit Doge right here. Let's hit Doge. I hate Doge anyway. Let me see here. How are we looking? Let me scale this chart a little bit before I hit it. I don't know. Actually, that does look deep. That could just be the snap up. It definitely could re-rally to the highs. It's a real nice looking bull formation too, isn't it? I mean, like, bulls tend to complete. It's a lot of volume into the top and the pullback. 13.5. What's the low here? 13.47. 13.5. Ooh. I guess if I get another re-rally and I could short off of that, potentially, I really can't short the bottom. Yeah, it's not there. All right, we'll have to come back. I think Doge is a potential winner. What else we got going on here? Shiba winner. Nope. They've all got the exact same looking pullback. Looks like everything's just following BTC right now. All right. Well, yeah, everything's pretty much following BTC. All right. I guess the thing to do is sit tight for a little bit. Just let this work itself out. That's exactly how we got in that other trade too. Remember we talked about, man, there's that crazy looking Darth Maul saber. Like, huh, there could be a lot of fuckery. And then we went in on it. Like I knew. And I was like, let's do it anyway. It's potential that I might not have all my brain cells. Alright, so hmm, yeah, it's ledging. Let's let it ledge. Do 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 do. ETH. Like I said, every single chart, just about the same. Minus LTC. LTC is the one counter runner. In fact, the old days too, I used to know how moves were going to go because I used to look at LTC. LTC was always kind of like a little bit ahead. For whatever, I think it's because it's the fastest, cheapest coin to move money around with. Like if you move like ETH or USDT and all that, like it costs more money. Moving LTC is like quick confirms and low cost. So maybe people are just moving that money faster first. You know what I mean? Before they move like USDC and USDT and everything else that's off. You know, not on its own chain. That chain's costly. It's always kind of been my idea on it. All right, so we're looking at maybe shorting to 1630 on ETH area possibly. Gonna wait and see what this rally looks like right now. Man, I'm going through a ton of water. I might have to just go get a refill anyway. It's $4 from checking the top. I'll hang out here for a second. Did it go over? What is the top here? Oh, this is the actual top, 1607.56. That is a high of the day. So where's the low? And that is the low, right? 15.29. So the entire high and low of the day was made inside 1, 2, 3, 4, 5, 6, 7 candles. That's pretty fucking scary. Yeah, here we go. 1598, 1572. So we should be getting a BTC rally here, right? A little bit, getting ready. Okay, so 834. We might pop over 21. Oh man, look at that dirty Darth Maul, boy. There's one there, but that's the big daddy, isn't it? That's pretty big daddy in itself, but this is what I'm looking at. See, there's that trend, there's that Darth Maul, there's that pullback, there's that compression, and then there's that, kind of slow fade off, and there's the overall compression, and there's that Darth Maul I was talking about that you can get it to either side. And that's the big dirty daddy of them all, minus this one. So that's the same thing I'm thinking. One to there, potentially on up to like 21.3. I think I probably. Oh man, that's it's riding the line, isn't it? Oof. So juicy. So juicy. That's an interesting run of candles though. That's compression, so we need to wait for a breakup or a breakdown. Let's go back and look at ABT. All right, so that's the exact spot where we sold was I think literally 736.7, wasn't it? 736.5. So overall, after all the given fuckery, like we were perfect anyway. It's okay. A little higher is great. We took off into perfect strength. No big deal. BTC, clearly we took off a little early, a little wrong. Took it off at 450 and it ramped, like right after, but I couldn't take the risk talking to Powell. So that minor loss to me, paying for that for protection, like it was worth it versus, being all sad, like, oh man, I lost a little bit of money. I could have made gains. Like, nah, not worth it in that case. Totally okay with that. 738 was trying to ramp, so probably BTC's going back up, right? Yep. Okay, so our long is doing well. We're only down 15%, 14% plus fees. All right, we're looking all right. Should we take a long on BTC on the old Getster? Should we take a long? Ooh, man, I really would like to take a short, but I don't know if that's the right thing to do. That candle makes me question. Like, if that candle wasn't there and this was just like the old explosion, like I'd expect a lot more. I'd like to take another trade. I need to focus on this one though. I was saying like, gosh, I just all that pop over and there's that whole, you know, this is probably the continuation over, but the day is not done, so there could be a whole lot more fuckery going around. Just go ahead and see what we got here. 15s. Yeah, it's a lot. It's ramping still, but it's running out of juice. It's running out of juice. Got my pimp juice. Let's remove that. It's kind of annoying. All right, so we'll probably get a little bit of pullback here. It's kind of looking a little soft. Is it enough to... Is that enough to drop out and go to a short? Nope. Not good enough. Could just be one of those. And we may just get a bottom out and lose it, and we'll be like, we kind of made some gains. But it wouldn't be a good trade, right? Even looking at this, it's 52.48. Like the push and pull right there, you know, it's pretty even. Pass. As we talked about too, where are the walls? Oh, right down into the walls. Oh, wait a minute. Did we go low enough that I got hit? Nope. I put that marker in right there, so if we hit it, I would know that my order got tapped. That's too bad. Would have been nice to put another, what do we have in there, 0.1? Yeah, we could have been up to 3. Dang, that would have been nice. Oh well, either way, protection was in. Still might hit it, you never know. All right, BTC's popping over to 16.9. How about on the Getster? How's it looking? LTC, ETH, 16.7. So we could have took that from the 1590 pop. We could have got up to 1523. Oh well, wasn't worth the risk. Just like I said, it's the first leg. I can't risk on that. It's too much risk. Okay, so we're up from 165 to 178. What is that? It was like 5% or something. $7.8. Not accounting for the decimal points and shit. Yeah, alright. It's not bad. So, by that token, it'll take us like 10 trade sessions to double that account, right? Something like that. Yeah. Alright. Waiting for a short. Waiting for something to peter out here. Pita grew. Pita's pita grew. Alright. I'm gonna pause this. I'll be right back and grab some breakfast and some water. Let this develop for a minute. Ooh, we got some orange juice. Let this develop for a minute. How we looking? High 756 sitting on 711. 1615 on ETH. So still no short there. Glad we didn't take a short. Midterms are looking good. I just stepped out and watched the news for a few minutes too. I wanted to see what was going on with Powell and whatnot. Gosh, that's quite a fall if it does take a fall. But it does look decent, doesn't it? It's not looking bad. I mean, I guess he does speak in like 3 minutes, doesn't he? Let me see if I could find. Let's see if he's got a live speech. Stock market coverage. I'm gonna pop out some Yahoo Finance here.
If you're using useless retail trading charts like...
Let's see.
What to do when it comes to inflation.
Joanne, perhaps Lloyd Blankfein, the former chairman of Goldman,
So make some comments on this Yahoo News here. We're going to watch this.
Are right now sitting with the thesaurus, trying to find the right word that means pause.
All right, Coinbase
or
750.
not pause, depending on who's listening. So what's the language you'll be listening for? What's the Fed drinking game, coffee, if you will? Is it data dependent?
Yeah, who knows what thesaurus they're using, but data dependent is a term I'm sure we will hear again. I think they will get into specifics to try to create that balance. One area is to be clear that house prices went up a lot, renters is up a lot.
Fed raises rates by 0.05. Oh, is it already announced?
The
okay.
labor market remains tight. They could cite the recent data on that. On the other hand, they're also likely to cite data that shows that the economy is slowing a bit, whether that comes from the liquidity constraints.
Fed raises rates. Dow is up 324%. NASDAQ is up 60. 332, up 1%. Misspoke. So they're up 1%. NASDAQ's up 0.6. S&P's up 0.76. Like, oh man.
Housing data, and so I think they'll have enough data in their arsenal to be able to strike that balance. I think they'll try to emphasize, right?
So let's go over and looks like he's about to hit the podium. I'm gonna switch over to this other one right now. Looks like they're already saying he did raise it, but it doesn't look like they've actually spoke yet. It's like they're saying it as fact. Like maybe they released it, he's gonna do it. But let's just watch and see here. I don't know what the rules are specifically for me tossing this news up here and watching it. I don't want to get any strikes or anything. I don't want to be a bad person. I don't know what the rules are on restreaming, so I'm just going to keep this off stream here and watch what's going on and wait for this guy to pop out here. Pop out like the wizard that he is, the financial wizard. The wizard. Where are we at? 16:15 on ETH. 2 minutes. Actually, he should be popping out right now. Looks like they're waiting. They're about to take some camera pictures. 11:30 my time, 2:30 their time. Should be any minute now. This dude's late to his own party. These comments are raw on Yahoo Finance. All right, come on, Mr. Powell. Let's do this thing. Here he is, Jerome Powell. Oh, and the market's taking a turn. He hits the podium and the market starts pulling back. here we go.
We have both the tools that we need and the resolve it will take to restore price stability on behalf of American families and businesses.
Ooh.
Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy.
The bedrock.
Without price stability, the economy does not work. In particular, without achieve a sustained period of strong.
Come on now. Cutting that sound out.
Today, the FOMC raised our policy interest rate by 75.
Boom. Raised by 75.
We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we're continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance of policy for some time. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed significantly from last year's.
Why, yes, it has, Mr. Powell. Slowed significantly.
GDP rose at a pace of 2.6% last quarter, but is unchanged so far this year. Recent indicators point to modest growth of spending and production this quarter. Growth in consumer spending has slowed from last year's record
Wow.
pace, in part
Did we make a
reflecting lower
mistake in
employment
shorting the
and
1600 mark?
tight financial conditions. Activity in the housing sector has fallen significantly, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment.
You suppose? Yeah, I suppose they are.
Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very
50-year
high,
low.
and wage growth elevated.
Huh.
Job gains have been robust, with employment rising by an average of 289,000 jobs per month. over
What
August
jobs
and
are they
September.
working at?
Although job
Oh,
gains
that's
have
just people
moved
going back to
below
work that were
highs,
out for
the pace of job gains has slowed from earlier in the year.
the pokey
The labor
pokes.
market continues to be out of balance, with demand
So
substantially exceeding the supply.
it's not
of
exactly
available workers.
true, right? Like, I mean, that's more like
The labor
alchemy.
force participation rate is little changed since the beginning of the year.
Huh.
Inflation remains well above our longer run goal of 2%.
Yeah, it
Over the
does.
12 months ending in September, total PCE prices rose 6.2%, excluding the volatile food and energy categories. Core PCE prices rose 5.1%. And the recent inflation data again have come in higher than expected. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food, and has created additional upward
You don't
pressure on
you don't
inflation.
say. You suppose a war has
Despite elevated inflation,
some
and
problems on
near-term price
globalized
expectations
supply
appear to
chains, huh?
remain well
Wow.
anchored, as reflected in a broad range of surveys of households, businesses, and forecasters,
This guy's a regular
as well as
Einstein.
measures from financial markets. But that is not grounds for complacency. The longer the current
It's
level
not?
of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched.
Oh my God, really? Wow.
The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people.
Oh, that's your mandate.
My colleagues and I are
Ah.
acutely aware that high
Acutely?
inflation imposes
It's a big word.
significant hardship
Yes.
as it erodes purchasing power,
Why?
especially for those least able to meet the higher costs
Wow.
of essentials like food, housing, and transportation.
You mean the things that went up the most, right?
We are
Gotcha.
highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 75 basis points, and we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. With today's action, we've raised interest rates by 3 3/4 percentage points this year. We anticipate that
Wow.
ongoing
3
increases in the
3/4
target range for the federal funds rate will be
ongoing.
appropriate in order to attain a stance of monetary policy that is sufficiently restrictive
I
to
may have
return inflation to 2% over time.
made a mistake on this short.
Financial
That
conditions
seemed
have
good.
tightened significantly in response to our policy actions, and we are seeing the effects on demand in the most interest rate sensitive sectors of the economy, such as housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. That's why we say in our statement that in determining the pace of future increases in the target range,
Determining the
we will
pace.
take into account the cumulative of tightening of monetary
Take
policy
into
and
account.
lags with which monetary
Lags.
policy affects economic activity and inflation.
Activity. Some keywords there. Here we go.
As I've said in the last two press conferences, it will become appropriate to slow the pace of increases. As we
Slow the
approach level of
pace.
interest rates that will be
Slow the pace,
sufficiently
my dude.
to bring in
Oh, volume cutting in and out as usual. Hey, yo. Let's go 1570. 1571. I guess 0.76. Make up some arbitrary numbers. Gonna close this bad boy. 100. 1571, 76. Close long. Whoops, insufficient number of orders. What? Did I make a mistake? Close limit. Do 5, close long. What? Huh. Shouldn't I? What am I doing wrong here? 1571. I'm confused. Why can't I close that way? Let's close limit. That's confusing me. Insufficient number of orders. I have an order right here. What are you talking about? What in the balls is going on? 55. Insufficient number of orders. What? I must be retarded. Am I just retarded in general? Eats am I on? I'm on E. The flying fuck. So if I want to close this trade, why can't I close it at 1571.65? I should be able to close it for all of it, right? Oh, Jesus. Yeah, I'm retarded. Looking back at this, I'm absolutely retarded. Close short. Man, just the red button automatically gets me. I do not like the way this is set up, man. This is super annoying. Jesus. I'm reading it and I'm still colorbound. Like it's that thing you look at on TikTok where they
level that's
go back and forth.
to bring inflation down to our 2% objective. How will we know that level? Well, we'll take into account the full range of analysis and bear on that question, guided by our assessment of how much financial conditions have tightened, the effects that tightening is actually having on the real economy and on inflation, taking into consideration lags, as I mentioned.
Consideration for
At
lags.
real rates, for example, all across the yield curve and all other financial conditions, and as we make that assessment.
Hi, Howard Schneider with Reuters. Look, I'm sure there's going to be tons of confusion out there about whether this means you're going to slow in December or not. Would you say that the bias right now is not for another 75 basis point increase?
Ouch.
So,
oh, here we go.
what I want to do is put that question of pace in the context of our
Question
broader
of
tightening program, if I
pace.
may, and hit to talk about the statement language along the way. So I think you can think about our tightening program as really addressing three questions. The first of which was and has been how fast to go. The second is how high to raise our policy rate. And the third will be eventually how long to remain at a restrictive level. So on the first question, how fast to tighten policy, it's been very important that we move expeditiously, and we have clearly done so.
Wow, they're bouncing fast again. I'm not liking it.
Since March, admittedly from a base of 0. It's a historically fast pace, and that's certainly appropriate, given the persistence and strength and
that's bear
inflation
trappy,
level
isn't it?
So now we come to the second question, which
Really
is how
is.
high to raise our policy rate, and we're saying that we'd raise that rate to a level that's sufficiently restrictive to bring inflation to our 2% target over time, and we put that into our post-meeting statement because that really does become the important question we think now is how far to go, and I'll talk more about that. We think there's some ground to cover but before we meet that test, and that's why we say that ongoing rate increases will be appropriate. And as I mentioned, incoming data between the meetings, both the strong labor market report, but particularly the CPI report, do suggest to me that we may ultimately move to higher levels than we thought at That level is very uncertain, though, and I would say, we're going to find it over time. Of course, with the lags between policy and economic activity, there's a lot of uncertainty. So we note that in determining the pace of future increases, we'll take into account the cumulative tightening of monetary policy as well as the lags with which monetary policy affects economic activity and inflation. So I would say as we come closer to that level, move more into restrictive territory, the question of speed becomes less important than the second and third question.
Speed.
And that's why I've said at the last two press conferences that at some point it will become appropriate to slow the pace of increases. So that time is coming, and it may come.
Ooh, that time is
as soon as
coming.
the next meeting or the one after that. No decision has been made. It is likely we'll have a discussion about this at the next meeting, a discussion.
Oh, that pop is not
To be
good. Look
clear,
at that.
let me say again, the question of when to moderate the pace of increases is now much less important than the question of how high to raise rates and how long to keep monetary policy restrictive, which really will be our principal focus.
If I could follow up on that, to what degree was there an importance or weight given to a need to signal this possibility now, given all the concerns really around the globe about Fed policy sort of driving ahead and everybody else, dealing with their own stress as a result?
Well, I think I'm pleased that we have moved as fast as we have. I don't think we've over-tightened. I think there's very difficult to make a case that our current level is too tight, given that inflation still runs.
He's a pretty
well
good
above
interactor.
the
He's a lot better than
funds rate.
Bernanke was.
So I think that at this meeting,
I like
last
this
two
guy.
meetings, as I've mentioned, I've said that there would come a point, and this was a meeting at which we had a discussion about what that might mean, and we did discuss.
We're
this,
watching
and as
Yahoo
you
Finance
mentioned,
right
we
now,
discussed
live
it again in
feed.
December.
Chair Jerome Powell delivers
There's
remarks
no-
on
I don't
interest
have any
rates following
sense
the
that we've
FOMC.
over-tightened or moved
Don't
too
own the
fast. I
rights to
think
this
it's
or
been
anything
good
else.
and
We're just making
successful program,
commentary on
and
what
we-
he's saying as we go
we've
along since
gotten
we're
it slow
trading.
this fast. Remember, though, that we still think there's a need for ongoing rate increases.
Ongoing rate
And,
increases.
We
Okay.
have some ground left to cover here, and
Some ground left to cover.
And cover it we will.
Cover it he will. He's a great speaker, isn't he? He's really likable for a Fed chair. Wow, that's amazing.
Nick Tamaros of the Wall Street Journal. Chair Powell, core PCE inflation on a 3 or 6 month annualized basis and on a 12-month basis has been running in the high fours, close to 5%. Is there any reason to think you won't have to raise rates at least above that level to be confident that you are imparting enough restraint to bring inflation down?
So this is the question of
It's a great question,
does
isn't
the
it?
policy rate need to get above the inflation rate? And I would say there are a range of views on that. That's the classic Taylor principle view. But I would
Oh,
think you'd look
classic
more
Taylor
at a
principle. This
forward,
boy's
a forward-looking
he's good.
measure of inflation to look at that. But I think the answer is we'll want to get the policy rate to a level where it is where the real interest rate is positive. We will want to do that. I do not think of it as the single and only touchstone, though. I think
there
you
we
put
go.
some weight on that. You also put some weight on rates across the curve.
Some
Very few
weights
people
across the
borrow
curve.
at
Very
the
few people
short end,
borrow
at the federal funds rate, for
at the
example.
federal
So
funds rate.
households and businesses, if they're very meaningfully positive interest rates all across the curve for them, credit spreads are larger, so borrowing rates are significantly higher, and I think financial conditions have tightened quite a bit. So I would look at that as an important feature. I'd put some weight on it, but I wouldn't say it's something that is the single dominant thing to look at.
He's a
If I
he's
could
a
follow
good
up,
speaker.
What is your best assessment or the staff's best assessment right now of the current rate of underlying inflation?
I don't have a specific number for you there. So there are many models that look at that. And I mean, one way to look at it is that it's a pretty stationary object, and that when inflation runs above that level for sure, substantially above for some time, you'll see it move up, but the movement will be fairly gradual. So I think
Interesting,
that's
fairly
what,
gradual.
the principal models would tend to say.
So its
But I
principal
wouldn't
model
rely
says
on
that.
one
All right, that's
assessment.
cool.
There are many different, as you know, people publish an assessment of underlying inflation.
Oh, different ideas. What do you know?
Hi, Chair Powell. Thank you for taking our questions. Gina Smilik, New York Times. I wonder, do you see any evidence at this stage that inflation is or is at risk of becoming entrenched?
Risk of becoming entrenched. Great question.
Is inflation becoming entrenched? So I guess I would start by pointing to expectations. So if we saw,
Boy, I bet he was
longer-term
great in debate
expectations
class when he
moving
was
up,
coming
we'd
up.
be very
He's
troubled.
really
They
good.
were moving up a little bit at the middle part of this year, and they've moved now back down. That's one piece of data.
He is good.
Shorter-term inflation expectations moved up between the last meeting and this meeting, and we don't think those are as indicative, but they may be important in the wage-setting process. There's a school of thought that believes that, so that's very concerning. I guess the other thing I would say is that the longer we have, we're now 18 months into this episode of high inflation, and we don't have, a clearly identified scientific way of understanding at what point inflation becomes entrenched. And so,
Nice.
the thing we need to do from a risk management standpoint is to use our tools forcefully but thoughtfully and get inflation under control, get it down to 2%, get it behind us.
Nice.
That's what we really need to do,
Okay.
and what we're strongly committed to doing.
Well, that's good. At least they got a clear direction of what they're after. They admit that they don't know a lot about the rest, and they'll just keep hammering it forcefully until they get what they
Hi,
want.
Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. The statement points to lag times. I'm wondering if you can walk us through how you judge those lag effects, what that timeline looks
Lag
like over the
effects.
coming months or even
Okay.
a year, and
That's a
where
good
you would
question.
expect it to show up in different parts of the economy.
Yeah, so the way I would think about that is, it's a commonly, for a long time, thought that monetary policy works with long and variable lags, and that it works first on financial conditions, and then on economic activity, and then perhaps later than that even on inflation. So that's been the thinking for a long time. There was an old literature that made those lags out to be fairly long. There's newer literature that says that they're shorter. And the truth is we don't have a lot of data of inflation of this high in what is now the modern economy. One big difference now is that it used to be that you would raise the federal funds rate, financial conditions would react, and then that would affect economic activity and inflation. Now, financial conditions react well before, in expectation of monetary policy. That's the way it has moved for a quarter of a century, is in the direction of financial conditions, then monetary policy, because the markets are thinking what is the central bank going to do, and they're
That's
playing
right. They are thinking about what the central bank's going to do. It's pretty important.
Change that the effects on the economy.
Since you just said you can hammer the shit out of people, I mean, that stands to
I guess
reason.
The thing that I would say is it's highly uncertain, and so from a risk management standpoint, it would be irresponsible not to ignore them, but you want to consider them, but not take them literally. So I think it's a very difficult place to be, but I would tend to want to be in the middle, looking carefully at what's
Well,
actually
so far
happening
nobody's
in the
really
economy,
pro
and,
or against
trying to make good decisions
what's he
from a risk
saying in the
management
charts.
standpoint. Remembering, of course,
Even
that,
though it's 75 points, it
three
doesn't
words
sound
of
that bad
overtime
delivered by this guy.
we
This
could then
guy's
use
really
our
good.
tools strongly to support the economy. Whereas if we don't get inflation under control because we don't tighten enough, now we're in a situation where inflation will become entrenched, and the employment costs in particular, will be much higher potentially. So from a risk management standpoint,
Yeah, that's a great
we want to be
point.
sure that we don't make the mistake of either failing to tighten enough or loosening policy too soon.
And if I could follow up, should we interpret the addition to the statement to mean that more weight is put into those lag effects than they would have been after previous rate hikes?
So I think as we move now into restrictive territory, as we make these ongoing rate hikes and policy becomes more restrictive,
I
it'll
like
be
this guy.
appropriate now to be thinking more about lag. Of course,
Live Fed
we think
chair
about,
Jerome
the
Powell,
lags are just sort of a basic part.
restreaming
of
from
monetary
Yahoo
policy, but
Finance.
We will be thinking about them, but we won't be. I think we'll be considering them, but because it's appropriate to do so. Let me say this:
Just looking at
it's,
this from commentary standpoint while we're trading live, seeing how this reacts in actual crypto markets.
They think about a pause. It's very premature, in my view, to think about or be talking about
Very
pausing our rate.
premature
we have
about
ways to go.
pausing.
Our policy,
Ways to go.
we need
Okay.
ongoing rate hikes to get.
That
to,
sounds like he's not gonna pull it on the next one. He said maybe next time or the time after.
We
It's
don't really know exactly where that is. We have a sense.
he's hinting that
We're
it's not
waiting
gonna
for
get better.
sorry,
All right,
the
there we
December
go.
meeting,
So we got our fill.
a new summary of the projection.
71.55. All right, so we're up to 196 from 165. We're looking good, man. What did we get? Did we get a full 175? Yeah, cool. All right, made 18 bucks on that one. Not doing too bad. Thank you, Mr. Powell. Appreciate it.
As you look around the economy, the clearest impact
Sweet,
of
man.
tightening so far,
All right.
housing, maybe some venture-funded tech companies.
So,
it's been
let's
relatively narrow in
see.
terms of the labor market, consumer demand.
Where are we
A
at?
lot of sectors you don't see a ton of effect. Is the pathway and channels through which monetary policy works changing? Is it narrower than it used to be? And on housing in particular, are you at all worried that your
All right, we're up 18% on the account. It's not bad.
down the road?
I don't know that the channels through which policy works have changed that much. I would say a big channel.
Not
is
bad.
the
Thank you,
labor
Mr.
market, and the
Powell.
labor market is
Appreciate you.
very, very strong,
Of course, you're
very
killing me in
strong.
this other
Household
trade,
prices, of course,
but
have
we thought we were getting out. I'm glad we didn't long anymore. We were debating it because it was looking good, but like we said, let's wait and hear him speak.
a strong labor market
So
and
we've heard him
excess demand
speak.
in the labor market,
It's not
through Prometheus,
detrimental
which
yet,
also,
is it? It's
with households who have
still
strong
bear
spending
trappy,
power, built up.
but not time to go
So
in.
It may take time.
How we
may take
looking?
resolve,
What
it
did
may
we get
take
on the
patience.
low
It's
here?
likely to get inflation down. It may- I think
1561.
we see from our
So it's
forecast
10 lower. We
that
took it
it
off
will
into
take
strength.
some
That's good.
time
Wasn't even much
for
volume,
inflation to
so
come
no
down.
big
It'll
deal.
take time, we think.
Time for inflation to
So-
come down,
so
Mr.
was I getting
Powell.
your question there? Oh, housing, the housing part of it. Yeah, so, we look at housing, of course, housing is significantly affected by these higher rates, which are really back where they were before the global financial crisis. They're not historically high, but they're much higher than they've been. And you're seeing housing activity decline.
man.
You're seeing housing prices
Start talking about housing, boy, and that took it. That did it.
declining.
People
I
do
would
not
say
like the housing part.
The housing market was very overheated for the couple of
Oh.
years after the pandemic as demand
Very
increased and
overheated.
rates were low. We all know the stories of how
Demands
how
increased,
overheated
rates
the
were
housing
low.
market was, prices going up, many bidders, no conditions. that kind of thing.
Interesting.
So the housing market needs to get back into a balance between
Oh.
supply and demand.
He
We're
is
well
talking
aware
about
of
hammering
the,
it.
of
No,
what's
he's going to
going
hammer
on.
housing.
From a financial stability
Holy shit.
standpoint, we didn't see in this cycle the kinds of poor credit underwriting that we saw before the global financial crisis.
That's good.
Housing credit was very much more carefully managed by the lenders. So
Very good.
It's a very different situation and doesn't present doesn't appear to present financial stability issues. But,
Beautiful. That's good to hear.
no, we do understand that's really where a very big effect of our policies is.
Boy, that went rough. The second he started talking about housing, boy, that was it.
Hi, Victoria Guida with Politico. I wanted to ask about the labor market. You mentioned early on again that job openings are very high compared to available workers, and I'm just curious to what extent you do and don't draw a signal from that. So, for example, if wage growth is slowing and if maybe the unemployment rate starts to tick up, will that make you sort of decrease your focus on job openings? What do you see? Are wages what's really important? How are you thinking about the labor market as it relates to inflation?
So we talk a lot about vacancies and the vacancy to unemployed rate, but it's just one. It's just another data series. It's been unusually important in this cycle because it's been so out of line. But so has
Well,
credit,
when this ends,
so
this
have
might
wages.
pop.
So we look at a very wide range of data on the labor market. So I'd start with unemployment, which is typically the single statistic you would look to, is at a 50-year low, 3.5%. We're getting really nothing in labor supply now. We had, I think, a very small increase this year, which we had really thought we would get that back. Most analysts thought we would get some labor supply coming in. You mentioned wages, so I guess I would.
Labor supply. We got
characterize
12 million
as
new
sort of a
people
mixed
here. I'm
picture.
surprised we
It's
didn't
true
get
with
no
average
labor
hourly
supply. What are you
earnings,
talking
see-
about?
So I would call it a flattening out at a level that's well above the level that would be consistent over time with 2% inflation, assuming a reasonable
I don't
productivity.
know why I pegged at 2%.
with-
Like,
with
what's the big deal about 2%?
With the ECI reading this week,
What's
again,
so
a mixed
important
picture.
about
The
that?
headline number was a disappointment. Let's just say it was high. It didn't show a decline. There's some rays of light inside that. If you look at private sector workers, that did come down. The compensation did come down. But overall, though, the broader picture is of an overheated labor market where demand substantially exceeds supply. Job creation still exceeds, the level that would hold the market where it is. So that's the picture. Do we see? We keep looking for signs that
1760s
sort
in
of
order if we don't break down. So
softening
1440 to
is happening.
1760 based on these
Maybe that's
comments.
there, but it's not obvious to me because wages aren't coming down. They're just moving sideways at an elevated level, both ECI and average hourly earnings. We want to see, we would love to see vacancies coming down, quits coming down. They are coming down. Vacancies are below their all-time high, but not by as much as we thought, because the data series is volatile. We never take any one reading. We always look at 2 or 3. So it's a mixed picture. I don't see the case for real softening just yet, but we look at, I guess as I just showed you, we look at a very broad range of data on the labor market.
So do you see wages as being a significant driver of inflation?
I think wages have an effect on inflation, and inflation has an effect on
That's
wages.
right.
I think that's always been the case. There's always
If you go raise wages, people have more money to spend. They just don't value it as much.
Right now, I don't think so. I don't think wages are the principal story of
This
why
looks interesting,
prices
doesn't
are
it?
going up. I don't think that. I also don't think that we see a wage price spiral. But again, it's not something you can, once you see it, you're in trouble. So we don't want to see it. We want wages to go up. We just want them to go up at a level that's sustainable and consistent with 2% inflation. And we think we can.
Basically, you don't want to see any imbalance. You want to give them a raise so you get more taxes, but they don't make any more.
Through the unemployment channel, it can soften through job openings declining. We think there's room for that, but we won't know that. That'll be discovered empirically.
Thank you so much. Kayla Tausche from CNBC. Earlier last month, the United Nations warned that there could be a global recession if central banks didn't change course. The new UK Prime Minister warned of a profound economic crisis there. And I'm wondering how the Fed is weighing international developments in light of a very strong economy here in the U.S. that would seem to be bucking those trends.
A very strong economy in the U.S. Wow.
So, of course, we
That's
keep
interesting, isn't it?
close tabs on economic developments and also geopolitical developments that are relevant to the economy
dang it.
abroad. We're in very frequent contact with our foreign counterparts, both through the IMF meetings and the regular meetings with central banks that we have, and I have one this weekend with many central bankers. So we're in touch with all of that. So I guess it's clearly a difficult time in the global economy. We're seeing very high inflation in Europe, significantly because of high energy prices related to the war in Ukraine.
This might have been a mistake, but we'll see.
We're seeing
Housing seemed to be the big one, so let's see in relation to what this gent says next.
So we see those difficulties. The strong dollar is.
What do we get for a fill? 1565.
We take all of that into account in our models.
1565 seems a little high now.
Here in the United States, we have a strong economy, and we have an
Okay, I
economy
guess it was
where
about
inflation is
right.
running at 5%. Core PCE inflation, which is
Core
really good
PCE
indicator of what's
inflation
going on,
is a good
for
indicator.
us, the
Okay.
way we see it is running at 5.1% on a 12-month basis, and sort of similar
Okay.
on a 3, 6, and 9-month basis.
3, 6, and
We
9.
know that we need to
Power
use
of
tools to keep
Tesla,
inflation
baby.
under control. The world's not going to be better off
3,
if we fail
6,
to do
and
that.
9.
That's a task we need to do. Price stability in the United States is a good thing for the global economy over
That's
a long
right.
period of time.
That's
Price
right.
stability is the kind of thing that pays dividends for our economy.
That's right.
For decades.
That's right.
probably.
Kanye was
We know
wrong.
it's difficult to get it back. Getting it back is something that gives.
That's right. The
provides
benefit of
value
all.
to the people we serve for the long run.
Thank you. The Fed has acknowledged in the past that the tools that you have don't affect things like energy
Okay.
and food prices. that
Tools they
stem from
have.
Some of those conflicts overseas, and they're some of the biggest pain points for consumers. So, as
Don't
you
affect
pursue
it.
the current path that you've outlined, is there a risk that some of those prices simply don't come down?
That's a
We
good
don't
question, isn't
directly
it?
affect, for the most part, food and energy prices, but the demand channel does affect them just at the margin.
At the
thing about
margin.
The United States is that we also
Okay.
have strong. In many other jurisdictions, the principal problem really is energy. In the United States,
Principal
we also have a
problem is
demand issue. We've got an
energy.
imbalance between demand and supply, which you see in many parts of the economy. So,
Okay.
our tools are well suited to work on that problem, and that's what we're doing. You're right though. We don't, the price of oil is set globally, and it's not something we can affect. I think by the actions that we take, though, we help keep longer-term inflation expectations.
That's right, because they give people less money to buy that stuff, so they can't run rampant and just grab more profits. So on the margin, he's right. He's right on the margin.
Why inflation is high.
Yeah, that makes a lot of sense on the margin.
Hi,
I like
Chair
this
Powell,
guy.
Janelle Marte with
Boy, this guy's
Bloomberg.
good.
So the Fed is facing two more ethics-related incidents with
Two more
the
what?
revision of the financial statements from President Bostic and President Bullard speaking at a closed event. So some senators, like Elizabeth Warren, are saying that this is a sign of greater ethics problems at the Fed. Could you talk about what this does to the public's trust in the bank and what the Fed is doing to prevent this kind of behavior from becoming common?
Sure. So you're right. The public's trust is really the Fed's and any central bank's most important asset. And anytime one of the policy
Most
makers
important
violates or falls
is,
short of those rules, we do risk undermining that trust. And
Ooh.
we take that very seriously. We
Do you now? They
so
take it very seriously about
at the beginning
disappointing the
of our
people.
meeting yesterday, actually,
That's
we
crazy.
had a committee discussion of the full committee on the importance of holding ourselves individually and collectively accountable for knowing and following the high standard that's set out
That's
in our
right.
existing rules.
That's
with
what I'm
respect to
talking
both
about.
Personal investment activities
Boy,
and
that's-
external communications.
Wow, maybe you could teach
And,
Pelosi that.
We've taken a number of steps, and
Wonder what Powell
I would
invests in.
just say we do understand how important those issues are. I would say that our new investment program that we have is up now and running, and actually it was
Nice.
through that
Nice.
the problems with President Bostic's disclosures were discovered when he filed his new disclosures. That's we now have a central group here at the Board of Governors that looks into disclosures and follows them and approves people's disclosures, and also all of their trades. Any trade anyone has to make who's covered has to be pre-approved. And
Nice.
there's a lag. It has to be
Very cool.
45 days before it happens. So there's
Nice.
no ability to game market. So it's a really good system.
That's
It
very
worked
cool.
here.
Good for him. I like that.
And I
Market's
think we
responding
all
well too. Look at that.
said to each
Going
other
up.
yesterday morning.
Start
we
holding these
reached
senators
to each other and
to that
this
shit.
institution
That's right.
to hold ourselves to the highest
That's
standards
right.
and
Good job,
avoid
Mr.
these
Powell.
problems.
Good job.
Do you have an update on the investigations that are pending?
Ooh.
So as you know, I referred the matter concerning President Bostic to the Inspector General, and once that happens, I don't discuss it with the Inspector General or with anybody. It's just the Inspector General has the ability to do investigations. We don't really have that, so that's what we do.
Very cool. Good job, Mr. Powell. Appreciate that.
Michael McKee from Bloomberg Television and Radio. Earlier this year, you touted the 3-month bill yield out to 18 months as the yield curve with 100% explanatory power. And you said, quote, if it's inverted, that means the Fed's going to cut, which means the economy is weak. That curve is only 2 basis points away from inversion now. So I'm wondering why you are so confident that you have not over-tightened, particularly given that rates work with a lag.
Well, so we do monitor the near-term forward spread. You're right, and that's been our preferred measure. We think it, just empirically, it dominates the ones that people tend to look at,
Empirically.
2s, 10s, and things like that. So it's not inverted, and also you have to look at why things, why the rate curve is doing what it's doing. It can be doing that because it expects cuts, or because it expects inflation to come down.
That's
In this
right.
case, if you're in
Expectation.
a situation where the markets are pricing in significant declines in inflation,
Ooh.
that's going to affect the forward curve.
Ooh,
So
look
yes,
at
we
him.
monitor it. You're right, and that's what I would say.
If I could follow up, you also said several meetings ago that the risk of doing too little outweighed the risk of doing too much. Is what you're trying to tell us today is that that risk assessment has changed a little bit?
Well, what's happened is time has passed, and we've raised interest rates by 375 basis points. I would not change a word in that statement, though. I think until we get inflation down, you'll be hearing that from me. Again, if we over-tighten, and we don't want to. We want to get this exactly right. But if we over tighten, then we have the ability with our tools, which are powerful, to, as we showed at the beginning of the
Powerful tools.
pandemic episode, we can support economic activity strongly if that happens, if that's necessary.
There you go.
On the other hand, if you make the mistake in the other direction and you let this drag on, then it's a year or two down the road, and you're realizing inflation behaving the way it can. You're realizing that you didn't actually get it. You have to go back in. By then, the risk really is that it has become entrenched in people's thinking, and the record is that the employment costs, the cost to the people that we don't want to hurt, they go up with the passage of time. That's really how I look at it. So that isn't going to change. What has changed, though, you're right, is we're farther along now, and I think as we're farther along, we're now focused on that. What's the level we need to get to rates. And I don't know what we'll do when we get there. By the way, it doesn't. We'll have to see. There's been no decision or discussion around exactly what steps we would take at that point. But the first thing is to find your way there.
Thank you. Chris Rugaber at Associated Press. Just to go back to housing for a minute, you mentioned the impact that rate increases have had on
There it goes
housing.
back to housing. See what that does to the market.
25% in the past year.
Home sales down 25%.
This is really
That's good because it brings it down for people that don't have homes yet. Bad for people that already own.
And as we go forward,
That's why they try to keep it at a
real-time
steady
rates clearly
2%,
going
so it doesn't
housing. Are you going to need to
hurt anybody in
greater weight
any
on that
direction.
in order to ascertain things like whether there's over tightening going on, or will you still focus as much on?
Ooh, boy, housing's a hot button, boy.
So this is an interesting
Oh,
subject. So,
yep, it is an interesting subject, isn't it?
I start by saying, I guess, that the measure that's in the CPI and the PCE, it captures rents for all tenants, not just new leases.
Okay.
And that makes sense.
There we
actually,
go.
Because that for that reason, that conceptually, that's sort of the right.
That's right. Good job.
target
Well, this
for
guy's good.
monetary
I like
policy.
this guy.
And the same thing is true for owner's equivalent rent, which comes off.
Boy, he had a hell of
It's a reweight
hell of an
rent.
economy to deal with, didn't he? Given
Private
post
measures are of course
post
good at picking
19
up
era.
the at the margin the new leases, and they tell you a couple things. One thing is once you I think right now, if you look at the pattern.
Boy, look at
pattern of
that pop up on
series
him
of the
talk.
New leases. It's very pro-cyclical. So rents went up much more
Pro-cyclical.
than the CPI and PCE rents did.
That's right.
And now they're
Sure
coming down
did.
faster.
Awesome.
So the implication is that there are still
So rents are coming down. Good.
As non-new leases roll over.
There it
become-
is.
And expire, right? There's still in the pipeline. There's still some significant rate increases coming. Okay, but
Heck yeah.
at some point, once you get through that, the new leases are going to tell you that what they're telling you is there will come a point at which rent inflation will start to come down. But that point is
Very
well
cool.
out from where we are now. So we're well aware of that, of course.
Well
when we look
out.
at it.
Okay. So you got waiting for rollover.
But I would say that in terms of the right way to think about inflation really is to look at the measure that we do look at, but considering that we also know that at some point you'll see rents coming down.
And just a quick follow. It looks like stock and bond markets are reacting positively to your announcement so far. Is that something you wanted to see? Is that a problem, or how much that might affect your future policy to see this positive reaction?
We're not targeting any one or two particular things. Our message should be, what I'm trying to do is make sure that our message is clear, which is that we think we have a ways to go. We have some ground to cover with interest rates before we get to that level of interest rates that we think is sufficiently restrictive. And putting that in the statement and identifying that as a goal is an important step. And that's meant to put that question really as the important one now going forward. I've also said that we think that the level of rates that we estimated in September, the incoming data suggests that that's actually going to be higher, and that's been the pattern. I mean, I would have little confidence that the forecast, if we made a forecast today, if we were doing an SEP today, the pattern has been that one after another they go up, and that'll end when it ends. But there's no sense that inflation is coming down. It just, if you look at the I have a table of the last 12 months of 12-month readings, and there's really no pattern there. We're exactly where we were a year ago. So, okay. So I would also say it's premature to discuss pausing, and it's not something that we're thinking about. That's really not a conversation to be had now. We have a ways to go. And the last thing I'll say is that I would want people to understand our commitment to getting this done, and to not making the mistake of not doing enough, or the mistake of withdrawing our strong policy and doing that too soon. So I control those messages, and that's my job.
Edward Lawrence with Fox Business. Thank you, Fed Chairman. So, how big of a headwind is all the fiscal spending to what the Federal Reserve is trying to do to get inflation back?
How much headwind? Excellent question.
You know, in theory, it was a headwind this year, but I do think the broader context is that you have households that have these significant amounts of savings and can keep spending, even in. So I think those two things do tend to to sort of counterbalance each other out. It appears consumer spending is still positive. It's at pretty modest growth levels. It's not shrinking, but people are, and the banks that deal with retail customers and many retailers will tell you that the consumers are still buying, and they're still they're fine. So I don't know how big the fiscal headwinds are, and they haven't shown up in the way that we thought they would in restraining spending. So it must have to do with the savings that people have.
What about the spending? There's tens of billions yet to be spent. I mean, from the Inflation Reduction Act, the American Rescue Plan, CHIPS Act, bipartisan infrastructure bill. How does that play into your thinking about the future?
You know, it's
Ooh, that's a good question.
Demand is going to have some support from those savings.
Have some support,
and also
huh?
from the strong demand that's still in the labor market. We still see pretty significant demand and a tightening labor market in some respects. Although I think overall, I would say it's not really tightening or loosening. So we see those things, and what those things tell us is that our job is going to require some resolve and some patience over time. We're going to have to stick with this. That's just we take all that as a given, but we know what our objective is, and we know what our tools can do.
Market go.
That's how we think about it.
That's how you think about it. Good job. Oh, last question. Last question. Nancy Marshall from Marketplace. Live. Fed Chair Jerome Powell. Looking for a soft landing. Has it landed?
Has it narrowed? Yes.
Oh.
Is it still possible? Yes.
Oh.
I think we've always said it was going to be difficult, but I think to the extent rates have to go higher and stay higher for longer, it becomes harder to see the path. It's narrowed. I would say the path has narrowed over the course of the last year, really. Hard to say. Again, I would say that the sort of array of data in the labor market is highly unusual, and to many economists, there is a path to. Ordinarily, there's a relationship to GDP going down and vacancies declining, translating into unemployment, or there's Okun's law. So all those things are relationships that are in the data, and they're very real. Data's a little bit different this time, though, because you have this tremendously high level of vacancies, and we think on a very steep part of the beverage curve. All I would say is that the job losses may turn out to be less than would be indicated by those traditional measures because job openings are so elevated and because the labor market is so strong. Again, that's going to be something we discover empirically. I think no one knows whether there's going to be a recession or not, and if so, how bad that recession would be. And our job is to restore price stability so that we can have a strong labor market that benefits all over time, and that's what we're going to do.
Just real quickly, why do you feel like the window has narrowed?
Because we haven't seen inflation coming down. The implication of inflation not coming down, and what we would expect by now to have seen is that as the supply side problems had resolved themselves, we would have expected goods inflation to come down by now, long since by now. and it really hasn't. Although actually it has come down, but not to the extent we had hoped. At the same time, now you see services inflation, core services inflation moving up, and I just think that the inflation picture has become more and more challenging over the course of this year, without question. That means that we have to have policy be more restrictive, and that narrows the path to a soft landing, I would say. Thanks very much.
Ooh, this guy is good. That was live Fed Chair Jerome Powell. We watched how it played out in the markets. Did a little live trade as he talked. Didn't get back up to where I was hoping to in that last conversation that he had, but it didn't tank as bad either as I thought it was going to when he started talking about housing. This is where he started talking about housing. This is where he started getting positive. That's kind of where he started asking about stock market. So anyway, thanks for watching. That was good. We're going to go back to just regular trade. We're going to cut this off. And hopefully YouTube is cool with that, because I don't know what the rules are for attribution or whatever for looking at that. But like I said, I wanted to look at it for commentary for trading on here live to see how a basis point raise does affect the charts and how I handle that in my trade journal. I've never really looked at it live like that and streamed it over. Maybe we'll do it again on the next one, kind of see what that does to the markets. So we're on a 20x ETH here, 165 was the account start equity. Made a little money with Powell speaking, and we could get out right now with fees more or less. Maybe we will. I was going to let it play out a little bit after he's finished talking. See what we got going on over here in BTC. Still some crazy wicking. Overall, it's trying to go up though. Let's look at the 30. That's more or less down while he was speaking. Some minor upticks. Might not be good. We'll have to wait and see. However, it did not break down below the 20K mark into the 19 range. So even though we could have got out a little bit better on that, I would not have gotten out. Wouldn't have mattered. They would have had to buy me in. And they bought me in at 433 and it's 454. So basically, net change realistically zero. It could tank right now, but I think I had up until 3 o'clock, which is just where it ended, is what I thought I had. That's what I had figured out, because it said I entered at 3. But I guess apparently that's UTC, so they did buy me in a few hours ago. But realistically, where they bought me in at, it's about where I would have got out at anyway. So all net, it's all the same. We got time on this long. Unless it tanks out later today, we should be good. Tensor charts, like they went right down to where the wall was. And that's it. They stopped right there. It's going to come down and bounce again too, or it could just tank. We'll have to wait and see. But so far, it's not nearly as bad as it could have been. I was expecting much worse. Glad I didn't try to short or do anything crafty or too crazy. What are we at? Just a little bit of loss here. We might take this off because this isn't fantastic, right? And that's a crazy wick. That's how we got involved last time, to some stupidity. Would have been nice had we kept that BTC trade on, right? We could have made a little more in the pump, but couldn't risk it going into his talk. And now that it's over, can we risk leaving this on? I mean, yeah, we could. Let's see. In 3 hours, shorts are paying longs. I am long, so we'll get paid there. I think I could probably get that retest to 16. I'll have to wait and see here, though. Give it a few minutes to develop. Right now, obviously all the talking heads are running around, popping, talking about what Powell said. They're disseminating information as fast as they can about basis points and their critiques and what they feel is going to happen next. So depending upon if they're tweeting out negativity or they're saying like, oh, this isn't so bad, like that's going to have an effect too on the market after as well, because all those people have followers that trust them to, kind of button up the idea and give them a too long didn't read, couldn't watch soundbite to know what the highlights are. So let's see what the highlights are. See how that plays out in the market. Let's see. We're a little bit. We could hedge right now too into a short if we felt like it's really going to go bad. 62% sell. Oh, that slipped back to buys. I don't know. Like I said, it's still emotionally running. I'm not exactly against this, and I'm definitely not interested in taking a short just yet. I don't mind taking one up in this area at the 1600. just because we're coming off of some pretty, you know, what's the recent on that? Coming off some pretty much hires up in the 1660s. I don't think it's good enough to let go. Let me look at the dailies. There we go. 1 day. All right, let's go look at the 1 days. So that bull's pretty much completed, hasn't it? Yeah, given that the recent 1790, even though it's a long time back in 20 whatever, like people are starting to get more used to this Powell thing. You know, I don't know. I don't want to get involved on the wrong side of this, especially when there's that much room to run. Like if that was a top like up there for all the recent, that'd be cool. But when the range is 12 to 2000, that's a little too much. I'll let this play out a little bit. All right. How we looking? Doji's into dojis into dojis. Doji cat over here. Alright, that's not fantastic, but not terrible. What are we under, like $10 underwater? Something like that. I could be hitting a little baby double bottom thing there, formation. I'll have to wait and see. Alright, 51's down 16%. Is it good enough for a short? Absolutely not. Down 21. It's not fantastic, right? I guess we could have took it off there, but that was such a good run of candles. I wouldn't have took it off. Like that turn right there, I wasn't really expecting that, but that's part of his speech. So if I wasn't watching the speech, I'd have been like, what the fuck happened here? Oh, what the fuck happened here is Jerome Powell started talking about stock market. What the fuck happened here? Jerome Powell started talking about the housing market and how bad it was going to be, and then he started talking about recovery and rent rolls not looking so bad. And then stock market. So to mark this up on the chart, like this segment of like what happened here, attribute it to something. Powell speaking about housing. What did this rally get attributed to? Powell speaking about rent rolls and how they were going about their inflation setting, that it wasn't so bad. And then somebody asked a question about the stock market. Oh crap. And our policy is going to be, we're going to keep tightening until we get it right. That's what that looks like. Oh shit, that drop just took us down quite a bit, huh? Hey yo. Sir, please, you need to start rallying the other way. Thank you. Thank you. Actually, that's interesting. Him speaking into the closing did get worse. I wonder what kind of news was rebroadcast. We might end up getting actuated here. Don't get a decision put another blocker in or not. I wonder if that's going to go through 2000. Well, either way, 3 o'clock would have been done. That was like the max I knew that I had. 3 o'clock's passed. Even though it's gone lower past 3 o'clock, like I'd figured it out. I couldn't have done any better. So I got bought in just about right. However, had I had another day, we could find out that tonight it just goes through 20,000 and I'd have been fine. That'd be really upsetting if that's the case. That's interesting sell-off. I don't know. Still got the idea they're trying to trap bears, but I could be wrong. Let's just see how it goes. Make sure our blocks are in place. 1x at 180. 170. All right, so we're good to go. Let's throw this on 1x and limit. Go and start getting prepped. I don't know if we'll go through 250. Maybe not. I don't know. We'll see. Let's go take a peek. Ooh, that's dirty. Ouch. Surprised it is taken after versus before. Maybe it's because the replay is now. Now everybody's seeing it. Most people couldn't watch it live. Now they're seeing like little sound bites and clips. Yeah, that's dirty. I guess I could have took the short, huh? Okay, well, we got an idea of like in the future of how to play like these fed moves, knowing that after the move is over or after the interview is over, like the moves start to amplify out. So okay, so we got an idea here. I wonder if I should add here to bring down the average so I can get out a little earlier. If I could find a bottom potentially. Still looks bad though. All right, there goes our buy-in. Our next is 19,831. 19,841, just in case it dips past. We don't want to give them 3 just because. So we'll buy that up one more time. However, if it breaks through, God, it might go so far past, like so fast. Whatever. Cha-ching, throw that blocker in, baby. So it's got another 120 hours from this entry. So what is today? 2nd, 3rd, 4th, 5th, 6th. So the 7th is the max on that. And how are we looking? Are we getting ready to add to this long? That volume isn't really bottomed out yet, right? Like, we need to wait for a turn in the tape. I mean, potentially. And then we're just trying to look to get this back up and over. Like, do we want to drop a little more in here? Open, maybe. Maybe throw in a little bit more. Might be bad. We're gonna give this another pop. Try to bring this down. Bring this close long. Now we're in bigger than. Oh, that's still. Now we're in 0.93. So let's kill this. Okay, so we're in 0.93. Let's go back to a close. Go back to a limit. 1570, right? Let's try the 1569 since that's a whole number, and like 12. Let's do that. And we're gonna hit this entire amount. Try to get rid of it. We're gonna close this long this time because it's red. I don't know why it's not green. It's just so weird to me. All right, close this long up there. Throw in order. Hopefully we'll get the little blasties. I don't even know if that's enough to really get past fees and everything, but about 15 bucks on it. See if that's going to do it. Hopefully we don't tank a lot further. All right, cruising at 4%. Not too bad. Technically $1,400 in the trade because of the leverage at 20x. So we'll see where we're going. Let's go watch this for a little bit. All right, so we added a little more. Our cost now is 821. It's our cost basis, so we could get out somewhere around there for gains. It did cancel our sell because we added to position. So let's go back in. Let's go to limit. And where is that at? Forgot on this exchange a little different. Let's throw in a 20,000. 876 seems good. Okie dokie, hokey pokies. 8,876 seems good. So all we want to do now is just get out with our money. We're not trying to make these gains. Get as close as possible. If we're lucky, we'll get a re-rally. I really believe in that bear trapping. However, they might trap way down. Just depends. But there's potential. Oof, this wasn't done. I was looking for a fast growth and repop. Not going to happen. Might see some further tanking. Might see some real pain going on. All right, well, we still did the right thing. That was the right thing to do at that potential quick turnaround. That ledge could turn into support and rip for a second. Didn't happen, but it was the right thing. Well, maybe it's going to. We'll see. In a situation like that, if that much decline and stuff going on, I can't wait too many candles to find out. I kind of just have to make a quick decide, like add the risk or not add the risk. Because not adding it too early could really stop me from getting out and just breaking even and bouncing. And then also adding too soon could really, screw me over. That it declines a lot more, but at that point, I kind of have to make a decision. For me, it was better to try to get out after a decline, looking for the bounce. Bounce to break even and get into cash so that I can make a better position and decision once things are done. I could take it off right now and it'd still be up overall in the account, but we'll give it a minute. What are we looking like here? Okay, so that actually went lower than the initial crazy wick, which was 2145, 2102. Yes, this will probably break through 20,000, and it's got the potential, but totally up to the market maker. As it stands right now, they've got the potential to counter run this. Up to them. Balls in your court, Mr. Market Maker. Let's do it. No more lower walls. Let's see, where are there lower walls anywhere? Nope. Nothing up above, nothing down below, and nothing being put in. That's amazing. There is no walls nowhere. Nobody wants anything to do with this. Interesting. Everyone's bated breath. Nobody is sure. All right, potential doji candle, potential turn there. Turn or continuation, but still a pause. Pause is good in our favor, potentially paused. All right, there we go. Potential ramp back up. Let's see how that's handled. All right, only down 22%, 23% right now. Slow grindy, potential for the pop. It's looking decent. It's made a ledge anyway. Ledge is always in our favor. Ledge is always potential trend change before continuation versus just straight continuation. However, ledges that fail tend to add a little more downside thrust to them, so it's in our favor till it's not, and then it's really not in our favor. All right, 28%, 1536.70. We're in at 1555, so only 20 bucks away. That's a quick ramp on ETH. It's nothing. Oh, BTC is struggling though, so it's about to take everything with it. That's rough. We should be looking at a short on Doge as well. We're looking at Doge. Let's go see what that looks like. How did Doge shake out? Doge was up. About the same, right? We're looking at it, what, 13.4? Yeah, I mean, everything looks the same. What are you going to do? I think we're looking at it right here. So we technically could have got in, probably not got out, probably got wrecked. And then we're back right now, like basically where we would have got in. So I don't know. Nothing good going on there. It's just an indecisive market in general. Not a fan. Apt is still pretty much, I mean, it's the same chart over and over. Like, if you just wipe the name off this and only seen one, you'd be like, why isn't the chart changing? They arbined everything so much. All right, well, slow ramps there. Let's go back and look at our ETH trade. How we doing? Everything else is kind of pumping. All right. So we're only down 15% now. Well, at least we'll get out of break even probably. I guess the right move was taking that short, but it didn't feel good, so I don't like to take trades I don't feel good about. But it would have been the right play. Alright, on that 44 grind, I'm getting a little tired. Probably close this up and figure out what I'm going to do here. What am I protected down to 831? Boy, that could ramp through while I'm taking a nap real quick. Yeah, it's dangerous, boy. It's super dangerous. Well, even if I took it off right now, that'd take us down from 8 to 766. So all of our gains for the month and a half. So painful. But at least the account's intact. Just need to wait and see where they decide they're going to choke bears. Because bears have to cover somewhere. Bears have to cover somewhere. That's not the best looking setup now, is it? It's looking a little rough. That got me so bored watching that I actually just drifted off. Wow, that is amazingly boring. Oh my god. I'm gonna pause that so I don't end up snoring on you. I'm gonna sit here and watch this ramp up. So that BTC is taking its sweet time, isn't it? But it's kind of finding a little bit of stability. It looks like that dump might be done. It might continue on, but it wasn't just a straight drop, so it's not nearly as strong for the downside as I had hoped. But we're not short anymore anyway, so who cares? All right, well, this has hit a stall point, and given that I don't know if they'll take me down for that replay on finance Yahoo News, I'm going to go ahead and just stop the videos and the streaming here, and I'll pick back up later, but this should probably be okay. We're in at 178, which was like 195 or something before we got underwater. Hopefully we'll try to get breaking off in those fees. Anyway, I'm going to kill it for now. Thanks for watching.